the Bitcoin bottom is probably close, but if history is any indication, it's probably not here yet. This is Bitcoin on the weekly chart. I just want to start here because from every technical analysis indicator, from every historical data indicator, from every on-chain metrics indicator, it would be not surprising if Bitcoin has bottomed, and this was it. This is Bitcoin hitting this, just above the 786 of a long-term Fibonacci. This is a chart that I charted back in 2018. I charted the chart all the way back here, talking about Bitcoin making a move to all-time highs and back down to a speculative 786 in yellow there. Here's the actual 786 down here in the $17,000 range. And it really happened. And if we go to the Bitcoin chart in real time, this is what it looks like. This is the actual 786 in the real-time chart. It happens, the entire move. And this is based off the lifetime of Bitcoin, the history of Bitcoin. And when we're looking at this chart and we're looking at on-chain metrics, it kind of is like, man, Bitcoin's oversold. Man, institutional demand is going to be scooping up Bitcoin right now, even if it's going to be kind of a longer lasting bottom. Kevin Svensson, he made a good tweet a little bit ago basically talking about this. Bitcoin has now played out the same 62% decrease from the 50 simple moving average 50-week simple moving average rejection zone. And you can just see on the chart the similarities of the 2018 bear market low. And now it's kind of like, all right, we get ready. We can go into this just bottoming out range, right? And maybe that is the last leg down that you see right here, that last dip. Maybe that is what will play out. But why am I saying this? Why am I saying, if we're looking at history, that Bitcoin probably might have still room to the downside? And this is why. It's this chart. This is the S&P 500 index. This is a picture of traditional markets. And when we're looking at these markets, you can see S&P 500 index, I think it's down around 23% or so right now. Now, this move, we see what Bitcoin has done. Here's the COVID swing low. This is S&P 500 index bottoming out. Guess what? Bitcoin, a similar looking chart, bottoming out right there as well and bouncing to the upside. We have the 2018 correction on the S&P 500 index. Bitcoin, bear market low, bottomed out here. Even when we're looking at that Kevin Svensson tweet, that chart, this is the S&P 500 index moving down. This is Bitcoin moving down with it and bottoming out. Here's the thing, though. We zoom all the way out on this weekly chart, and Bitcoin has not survived this. And this is a major recession-style dip in the S&P 500 index. We're talking 57% to the downside, right? So here we are in a typical correction. It's very commonplace to what Bitcoin has experienced before. There it is, around 23% S&P 500 index. But Bitcoin has not lived through something like this. And it is, and the question is this on the way in terms of equity markets? And this is an article just came out today. It paints that picture. Stocks historically don't bottom out until the Fed eases. We're looking for stocks to bottom out. If we're looking for Bitcoin to bottom out, we must look to stocks to bottom out. It must be what we're waiting for. And so the thing is, it's just, it could have, but all indications are showing that there's a strong chance that it hasn't. If history is any guide, this sell-off might still be in its early stages. And here's the data to back that up. Going back to 1950, the S&P 500 has sold off at least 15% on 17 occasions. According to research from Vicky Chang, a global market strategist at Goldman Sachs Group Inc., on 11 of those 17 occasions, the stock market managed to bottom out only around the time the Fed shifted toward loosening monetary policy again. Is the Fed about to loosen monetary policy? Right now, in June 2022, it doesn't seem that way. The opening of the article states the sell-off might still be in its early stages because the Fed is not really giving hints that it's going to be loosening monetary policy. If anything, we all know it's going to be tightening monetary policy. And the Fed has only just gotten started. After approving its largest interest rate increase since 1994 on Wednesday, the central bank signaled that it intends to raise rates several more times this year so it can tamp down inflation. I've done a lot of technical analysis. Here's a chart from a video in 2022 in January, me talking about the retracement down to the $20,000 area. I mentioned $17,000 in this video in January, but what I did not take into account was this potential recession that could be approaching, right? There weren't as many hints of this back in January of 2022 that we'd be sitting here today. Now, going further down this article, check this out. It says, our feeling is that if the next inflation figure is very high again, the Fed could raise rates even more sharply. So does it look like they're loosening monetary policy or getting ready to? That could put further pressure on risky assets such as stocks, he added. Now, here's a chart. How much the S&P 500 fell during each recession. 1960, just under 15%. And then you can just see the averages moving up. 2007, there's that big 55+% retracement. And so the question is, as the S&P 500 index right now sitting around 23%, if we get into this 30+% even scenario, 40% scenario, what does that mean for Bitcoin? Did Bitcoin bottom out, and is it not going to do what it historically has done, which is follow traditional markets? Unsurprisingly, stocks typically don't do well during recessions. S&P 500 index has fallen a median of 24% during recessions. The median has been 24%. That means basically the S&P 500 index to fall in line with that median right now basically will have bottomed. And it could have. But that's a really risky play in my view. And so the silver lining for investors is that when the Fed begins to shift toward easing monetary policy, markets have historically responded positively and quickly. That's the silver lining. The problem is with that silver lining is that it does not look like the Fed is going to begin shifting towards easing monetary policy right now in June or even this summer. So what does that mean for Bitcoin? We have to be very, very careful. What is good, in my opinion, is this. One thing that we've noticed in terms of this retracement to the 786 on this Fibonacci, and by the way, here's a weekly chart. This is the Fibonacci. So last bear market low to bull market high. The 786 right down here in the $17,000 range, it's nice to see Bitcoin really made a move to it. But in these bear market lows, we've seen historically, Bitcoin doesn't make a move to it and bounce to the upside. Bitcoin actually bottoms out below the 786 in a bottoming out range. If we look at Bitcoin, that was 2018. Here's Bitcoin back here, 2015, bottoming out range. If you look at even the 786 back in 2015, we have extension from the 786. Look at this, 50%, 45 to 50% below the 786 is the bottoming out range. And then obviously back up to the 786 area. So that entire range right there, Bitcoin bottomed out. So here we are right now. Bitcoin still has that room. So even from a technical analysis perspective, Bitcoin very well could make that move. Maybe we get a bounce, right? Maybe we get a fake out bounce back to the 618. We're cruising up towards 30,000 and it's a fake out. It's a false rally. And then Bitcoin kind of comes back down for a final capitulation below the 786 somewhere. I'm not going to speculate in this video what that would look like, but somewhere below that 786 could potentially be an area for Bitcoin. You can see even the COVID swing low, just these capitulations, these pictures on the weekly of capitulation bottoming out. What will that look like on Bitcoin? It would be nice if it happened already, just kind of wicking just above the 786 line, but we have to pay attention to these numbers. We have to pay attention to equities markets and what's going on with Fed and monetary policy, because it doesn't look like that's easing up anytime soon, at least in the very short term. So we have to be careful. That's the purpose of this video. We can do a more short to midterm technical analysis in another video to discuss what a relief rally might look like. But in this case right now, everybody, and this isn't financial advice, but in this case, the best thing to do, in my opinion, is to observe and really, really prepare for every scenario. Meaning if Bitcoin diverges and does what everybody's been waiting for it to do, right? The hedge against inflation storyline. If it happens and Bitcoin just starts cruising up and equity markets are actually still falling, be prepared for that, right? Be prepared that it was a perfect 786 bounce and we're cruising to the upside now. But at the same time, in this very present moment, be prepared for some type of capitulation going into this summer, some type of just more downside, high fear event going into this summer. Be prepared for it. That's all we can do. Nobody knows what's going to happen next. Absolutely nobody knows. Even the most brilliant of brilliant, well-known analysts, economic analysts across the world, they don't know. So we're going to continue monitoring and watching what Bitcoin is going to do on the short and midterm. That's what we do. We're going to keep watching that, obviously. But at the end of the day, it's best to zoom out to know what is in play, to know where we are from a technical analysis indication type of standpoint, but to pair that up now with traditional markets and what they're doing and what they could potentially be doing for the rest of this summer. So those are my thoughts. Time will tell. We just got to keep it cool, calm, and prepare. I hope you have an awesome week. I'll see you in the next video. God bless.